Stavros Tousios from M4Markets. They're going to have a look at gold and Dow Jones. It's so interesting to see prices really just bouncing off the channels that we have drawn a while ago. One of those is the one to the uptrend, to the upside, where we've broken and we've actually come back for a rejection, guys. And this rejection is very important ahead of the NFP as well. If the NFP is good, that's gonna drive the dollar lower down, confirming the breakout outside this channel. On a different note, as we were coming down off that upside leg in the first attempt to break out, which was false obviously down here, we've drawn another channel like maybe two analysis ago, and that has now fallen down to retest the channel upper trend line. This tells us that there is potential that we remain within this territory, first of all, until we see either a powerful breakout to the upside or to the downside. What can happen? Correction, further continuation, and from there, of course, either we'll go up or we'll go down. The other case, we go down from here. We're going to see a bounce at some point, but then essentially and eventually just break lower. What do the indicators tell us? The indicator currently tells us that we have a double bottom here, okay, sort of, yeah. And with this divergence, hidden divergence, we are moving higher. Now, we haven't reached oversold territories here yet, overbought, sorry. So there is potential for more upside. We didn't even do the 23 Fibonacci, and the 38 is the next, given, of course, we go above the 1857, which won't be a surprise if we do get. So it is important, as we look at the markets going up now, to look at the 1 hour, and look at the 1 hour. We do have we actually came into overbought territories. So we need to see whether this is going to form a lower high over here on the RSI with a higher high on the prices, because that would be a divergence, and we should start considering prices either pull back or even reverse. I am, as always, going to be focusing on the 50 and the 61.8, which seems, by the way, to be at 1814 a cluster. So imagine something like this. You got Fibonacci clusters and the trend line rejection for a second time. Getting also that with a signal over here, this is going to be probably a short-term move to the downside, one way or another, technically speaking. If we look at the Dow, I want to show you something interesting. Maybe I should go, no, the 4 hour is okay. Look, if we draw the channel from the all-time high down here, or up here, this is the all-time high, yeah. We are going to see prices coming off down to the 28.65 or so, and then bouncing all the way up for a very decent move to the upside. That still seems to be a correction. Now, we started a downward leg and initiated a second downward leg over here now, which sets us off potentially for an extended downward leg. But as we approach this channel over here, we have also the 5th Fibonacci retracement to take into account. And we're falling hard towards that level, which means this is more likely to offer a bounce than not. We could break within, but very likely to reverse quite quickly for an initial bounce. So one way or another here in this area around the 31K, 32 to 31K, I suspect we're going to see somewhat of a bounce, and then the idea is further continuation to the downside. But of course, if we do manage to just retest that level and get bounce up here with high volumes, then we might actually continue to the upside. But there is still a lot of time for that actually to take place, or to give us any sort of signals. For now, that what we do know is that we have a divergence here, guys. Okay, and this divergence tells us that, you know, prices are more likely to be pressured downward rather than the other way around. At some point, eventually, we might get a divergence that will suggest that some upside respite is coming. But for now, we're just moving down, and I don't see we're going to see, and I actually think we're going to see that level being tested fairly soon.